Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and I actually just got back from walking my dog, and I noticed something very interesting. As I'm walking my dog, and any of you that might have a dog will know this too, a lot of the times, the dogs will sniff around and wait until they find some pee on the ground to actually go and pee, right? Dogs like to dominate over an area, and they won't pee unless they find other pee to pee on top of. Now, what's interesting and what got me thinking is that skill set in my dog is actually a better skill set than a lot of people already have in trading, and that is waiting for that confirmation, right? The dog will only pee if he finds another dog's pee, thereby creating some kind of good beneficial outcome to the dog. Similarly, as traders, we should be looking for that confirmation that there is another entity, the composite man, an institution, or anything of that like, getting involved before we look to get involved, or before we use that confirmation. And as a lot of you will know, traders that seek to get involved without confirmation, or psychologically, just try to get involved without any bearing as to why they're getting involved, right? Or just want to get involved because they want to make that money, end up shooting themselves in the foot and over time losing money over and over and over again. So similarly, we can take a page out of, we can take a page out of a small brain that is like a dog, right? And a dog is wired to do one thing over and over and over again. Sniff, 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 find pee, go pee. Similarly, we need to start acting more like dogs or more like robots. We need to be able to look at a market and go sniff, 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 and wait for that footprint or look for that footprint. And once we sniff, sniff, sniff and find it, that's when we look to confirm. And if we see that confirmation, we're good to pee right on top of it, or we're good to enter, right? Again, the anecdote's a little bit dumb, it's a little bit funny, but it's a good way to start thinking, right? Because the reality is, and I've been teaching this forever, without that confirmation, you're shooting yourself in the leg over and over and over again, right? Which always boils back down to the 3-step process I always teach you guys. One being structure, creating an overall narrative, right? Out of ranges, right? Determining where your protected low or your protected high is, and determining where the next run on liquidity is going to take place, right? In this case, it'll be the next structural impulse, because we understand that even though, when prices move in a certain way across timeframes and make moves like this, there are, right, let's say it comes back into a zone right here and begins to go long. We know that our overall target is this high right here, and that acts as the next liquidity draw on liquidity. And, if we clear that, there's a good chance we can see some real long-term upwards momentum as part of smart money getting, placed in here with their weak to strong hands. And then the huge continuation outside of it that goes to break higher, higher, and higher and deliver higher prices for those smart money that were able to get positioned, or for more smart money that can get positioned within the inside 3-box ranges set forth by lower time frames and lower time frame structures in here, right? So we understand that, one of the main points is finding that range, that structural range that creates in motion some kind of bias and some kind of run. And even though there is other points of liquidity within it that it can target, like the highs here, or the highs here, or the highs here, our main impulse and main structural impulse of liquidity that we want to see ran is always going to be the next high, which is why, in a market like UJ, and I've spoken about this a lot now, so I'm not going to do a lot on it, that is primarily bullish, we look to continue running the next structural high, even though there are inside ranges that we could see ran as, liquidity, right? So going back to GU, right, and going back to the same idea, right, this is what we use to get involved, right? So once we have a structural narrative put in place, then we want to look for that S&D, right? We want to see that zone that created this structural narrative, the S&D that created that second box of the 3-box system, right? Where did the composite man, right? Or where did the other dog pee, right? Where did the institution or the composite man take large positions that now need to see some form of mitigation, right? And that's only if we get that pullback. So where did that come from? Let's find it between a few timeframes, play around between those timeframes to find the most potent zone that makes the most sense for mitigation, and let's draw that out. And then number 3, as we all know, and as I've always taught on this channel, is that confirmation, or as we like to call it, Wyckoff, right? And this is exactly the same the same 3 rules I teach in very extreme depth within the mentorship. It doesn't change. What I teach you on my YouTube is the same thing I teach in the mentorship. The mentorship has more depth, has different confirmations, has different ways of thinking, has different concepts that you can utilize from an actual step-by-step scenario. However, the actual 3 things remain stagnant and remain true always and forever. And these are the main 3 things that I use. That's a marriage of Wyckoff, of Elliot wave, of Dow theory, and elements of smart money to now create an overall system that you can actually use, right? And that confirmation in Wyckoff is really your last bit of proof that, that P is resting there. It's really there. You can go and you can do it, right? Now, sometimes you're going to be wrong about it, right? Just like your dog might be wrong about the area, or there just might be no pee around, so the dog might not pee or just pee accidentally, right? And now all of a sudden, that's a lost trade, and that's fine. That occurs. There are going to be mistakes made, right? I take losses all the time. It's a very normal thing. Any mentor that tells you they don't take losses, it's complete nonsense and bullshit. There's no mentors really doing that, but if you've heard that, it makes absolutely no sense, right? So this confirmation of Wyckoff is one of the most important elements of this entire this entire anecdote, right? Without it, there is no reason to suppose this S&D within that structure is going to hold. Otherwise, you're just shooting yourself in the foot over and over and over again. And here's a good example of that, right? So on GU last week, we were very bearish on it and it delivered bearish, and we had a few people in the mentorship that caught this down. And again, within the mentorship, every single Sunday, we have an outlook where we break down any pair that anybody asks about, usually some of the majors, and then anything you want, whether it be crypto, altcoins, stocks, indices, anything that you really want, we break that down and then we have it play out through the week. However, at the end of this week, on the 28th, right, so about 2 days ago, we had this beautiful range put in motion. And that beautiful range put in motion, we've been bearish ever since we've been up. I think we've been bearish on GU in the mentorship, ever since we broke down structure over here on a higher time frame. And ever since then, we've been very bearish on this, right? And there's been beautiful setups all the way through. And I'm sure a lot of you that are not even in the private mentorship have been able to catch or capitalize on some of these moves here, in which case, congratulations, that's amazing. However, as we continued following it, right, and we continue following new ranges, this week, what did we have, right? Price comes down, we can go a little bit left. Remember how I teach you guys, go a little bit left, follow the ranges that play in, and find the range you're in using not intermediary structure, but using structure that was playing out and where it is now. So you have this pullback, this breakdown, right? We're bearish, another bearish breakdown, another bearish breakdown. So we're very bearish, right? Comes up, breaks down bearish. We go short term switches the bullish, but then remains bearish. Again, this is a great example of something that I teach you guys in the past few videos, where we spoke about the importance of understanding not just normal Dow, but also understanding Dow in the form of Elliot wave, right? Where there are liquidations, which are also elements of Wyckoff presenting themselves. And how do we know when it's going to liquidate to just continue breaking structure back down? Well, we know it by formulating our story and narrative within a higher time frame bias. So, it switches bullish, that's fine. Switches back bearish, remains bearish, right? Breaks down bearish again, gives beautiful absorption-based entries for people right here. We had a lot of people in the mentorship catch this down. They started catching it down, broke a new structural point to the downside, created a new S&D zone right here, right? Unmitigated zone, we followed them, right? Zone, broke down, came to mitigate, then broke down. So the last up move before the down move was this guy right here, this candle, right? And that's where price comes into, distributes on a lower time frame, plays around, comes back up, distributes in a lower time frame, and breaks down. So once again, really, your break of structure came from right here, right there, and that break of structure once again came from the last up move before the down move. So our bias for the week, or after we had all these sells play out, was to continue seeing those sells. Because remember, as I teach you on this channel, and again, for anyone that's new, make sure you've seen some of my other content before you jump into this right here. Otherwise, you're going to be very confused, and it's going to be far ahead of where you are currently. However, if you start from the beginning and work your way up, which you can because it's YouTube and everything is available from start to finish here, you're going to excel and push yourself forward in a way that you've never seen possible. Similarly, if you join up with a mentorship and start studying through our exclusive step-by-step process that we have laid out there, then you will also do the same thing for yourself, in some cases faster, because of course you have access to me, other members, etc., etc., etc. Now, enough for the advertisements. Sorry for the sponsorships, but thank you mentfx for sponsoring me. Let's jump right into the example here of the dog pee. Now, price comes, right, so price is making bearish structure, bearish price action, holding the bearish ranges created, holding the bearish supply and demand zones created, tapping into them, creating those Wyckoff elements and setups. And just to show you that really quickly, right, again, using the rule of 30 if you're on a 1 hour, like a 2 minute, 5 minute even work, but we're just going to play around with these. You have week, to strong hand transfers, breakdowns in structure, the last test of the last up move before the down move, and the continuation's lower. And of course, you have fractalized Wyckoff in here, right? Price comes down, comes back up into our area, creating the weak to strong hand transfer. Price breaking down below structure. Price coming back up to test the overall Wyckoff move up before the move down, aka the UTAD, and continuing lower to where? Usually the next low, as it does right here. Price coming back up into a zone, creating, once again, that weak to strong hand, breaking down, coming to test it, breaking down again. So, lo and behold, what do we expect for this weak continuation, right? Well, we expect price to, once again, break down, come into our zone, give us that weak to strong hand transfer, and begin to play downwards. So, again, the importance here is that now we've had our number one created, which is we have a structure put in motion. However, just because we have a structural narrative put in motion does not mean we are ready to enter trades, right? A lot of people make this mistake where they start to learn smart money or learn the way that mentfx trades, right? Or learns the philosophy behind mentfx and thinks that because they now understand structure, they can just trade, which is not true. Structure is just a precursor to taking an actual trade. And the way to then actually take it is to confirm it by the other two things. Remember the dog story. You don't just need to sniff around. You need to sniff around, find, sniff around, confirm, and then potentially take that entry or potentially P. Again, the anecdote is stupid. Again, I'm sorry for anyone that thinks it's a joke, but the reality is, it goes a far way. This very basic skill set of being able to just confirm something is something that a lot of traders lack because they want to get in, which is why, once again, as you've seen in my last few videos, retail for the most part is 80% bearish on this market here and has been 80% bearish for the most part ever since these areas here. And all of this upwards price action has been bearish retail selling and continuation on the smart money side or the Dow Theory side, the Elliot wave side, the Wyckoff reaccumulation side of markup, taking out highs, taking out structural highs, taking out main 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 structural highs, and what I still expect, because there's no reason not to expect it, going to take out the next main structural highs into potentially next week. So right now it's actually, market is closed. It's a Saturday. We have our main webinar tomorrow for Sunday in the mentorship. So, we're going to probably analyze that, and that's going to be what we're going to look for. And we're going to play around with some of the lower ranges to find where we are, right? But that is how and why a lot of people that are just trying to, think in just a structural narrative or thinking one quick narrative are always trying to get involved on the wrong side, right? That's how that's occurring. So going back to here, we are confirming. We are waiting like a dog. We are looking for that area to confirm like a dog. So you have that break, and now you have structure in motion. And now, because of that structure in motion, you also now have SND, right? And that SND shows you where those last buys before the sells occurred, where we could in the future see potential sells from. But once again, just because you have those two elements doesn't mean anything. It's not until you have all three elements and then you partner those elements with your management that you actually have a sound system that you can actually begin to properly test and then execute upon once you get to a really, really good, confident place in your, data collection, mathematical observations, et cetera, et cetera, et cetera. And if you're already there and you have a system that works for you and you're absolutely killing it, check out that link right above, just on top of me, mentfunding.com for, check out our model. If you like it, consider getting funded with our prop firm. We've had some amazing months going forward, and going forward, we're expecting to continue having amazing months. I think we've funded over 4 people now with the $1 million account. There's been no one that's taken a $2 million yet. So, we're waiting and really excited to see who's able to take that and pass it. So we'll see how that works and how that goes. So now that we have both of those in motion, you have one of two things you can do. You can either repeat these two things on a lower time frame when price gets there, or B, you can already confirm this. So again, if this is a 1 hour chart, you could confirm that using the rule of 30. Again, when you hear me say things like that, know that there are videos about it made prior, right? So also follow me on Instagram. I'm going to have some really cool posts coming forward. I'm working with an actual artist and I'm trying to put my own ideas into images. So just something fun, feel free to follow me on Instagram. Otherwise, do not worry about it. So we're going to go here. And what we'll do is, you can do something as simple as rule of 30 mentfx. And very simply, you're going to find exactly the type of things I'm talking about, right? So there's a buildup of education over time on this channel. And it's important that you complement and put things together as you go forward instead of just trying to stick to one video. Because if you try to stick to one video and learn from one video, you're going to get very confused. It's going to seem like I'm talking about like jargon and nonsense, when in reality, it's just a buildup of information over time. So start from the beginning, work your way through, see the evolution in time of my own understanding of the way I teach and how I began to complement and put together things like Dow, Elliot Wave, Wyckoff, and now smart money, all in one big branch of complete beauty, right? And we're seeing immense success from our own students, members, you know, and we're just going to continue doing so. So as we have this in motion, right, and the structure in S&D is there, now we need that confirmation, right? So as we get down to a lower time frame, you have a few things you can do. Right, you can notice this as we're watching this. There is some weak to strong hand transfer here and then somewhat of a breakdown. But notice that the breakdown, you know, is in the inside. And for some people, this might be an entry, which is fine. That's normal -1. But for some people, there was never a validation of an overall schematic. So there was nothing to do there. Now, again, if you're confused what I'm talking about, make sure you check out the last few videos because I went in depth on this. Similarly, once again, you have that transfer of weak, 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 to strong hands. And then you have an actual breakdown of structure and the validation of an overall schematic. So at that point, it actually is valid to set up you know, your entry at a potential last up move before a down move, have your stop loss above the high, look to take it lower. And then what do you notice? Price comes down, comes up, makes another break. So once again, what we're seeing is we're seeing a shift of certain structure on a lower time frame, right? So now at this point, this entry was valid. Why? Because we had structure confirmed with S&D, confirmed with a confirmation, right? And that was happening inside. But however, what we also see is the structure of this lower time frame now has reshifted, which means that our overall story or narrative that we've been beginning to create is now no longer valid for a trade from here, because now prices theoretically, under the way that we think and the way that we trade, holding as a protected high at this high right here. So price shouldn't make its way here. And if it does, it should signify that we are potentially actually breaking through a new structural high and should remain to be bullish. So at that point, the entry can actually be canceled. So notice how just, again, using this dog anecdote of actually looking for that confirmation, sniffing an area out and seeing if it's worthwhile to pee there, creates, you know, for you a system that you can actually delete an entry on before it comes and does the inevitable, which is clear it. But then once again, we can begin to follow this again. Weak, weak to strong hand does not break the structure. Weak, weak, weak to strong hand breaks the structure down. Once again, at that point, you could consider a trade from the last up move before the down move. You can see in this case, it didn't actually make a tap there. However, if you refine to the actual S&D zone, there's actually a beautiful tap there. However, we are now above, right? On the higher time frame, we're above, and we've broken out of that range. So already, this is one of those times where a lot of people are getting tricked into taking sells now, or dumb smart money is getting tricked into taking sells now, when once again, the dog sniff, the pee, whatever, the confirmation isn't there. It's gone. At that point, there is no trade to take there. So what's funny though, is as we began to break out, I actually sent this out to the team, right? On the 1 minute, what I was looking for, right, is you can see at this given point that we had a high made right here. We had this high made, and what I did is I followed that back to find where the low was, and you can see this big liquidation candle and the continuation upward. So I have my own way for viewing structure for anyone that's interested in what that way is specifically. So I'll actually show you guys this right here. I want to make sure the link is hidden. Okay, so I'll have to hide this link up here because that is a mentorship only area. However, the main way I view structure and look for valid pullbacks is this way right here. So what I'll do is I'll find a low that took out and liquidated a previous candle to show me where, you know, smart money once again sold impulsively before buying and what can act as that time frame's protected low. So for me, as I'm looking at this and I'm following this down, this candle right here liquidated this low on the left, which means there's some kind of sell before buy pressure there. So that's where that structural impulse is coming from. So for me at that point, what I sent out to the team is this following bias right here, which was if we see the break of this come down, then I expect the bearishness to come in motion, which means we can begin to look at that structure S&D confirm, or that entry off of Wyckoff or weak to strong as part of this bigger narrative of the structure S&D confirm of that higher narrative. On the other hand, because we've become bullish here, I'm not going to look for buys, but what I expect is if we do not break down below this impulsively with displacement, which is also a concept I teach about on my channel, then I'm going to expect price to continue drizzling upwards, and I'm done looking for confirms here because what I had prior to my structure, S&D, and potential area to confirm has not held, right? So that area that I've begun to sniff has no P on it. We're going to use that for the intro of this video, right? But the idea is that dog sniff found that there's no P there, so there's no reason to look for entries or force entries. And similarly, just like we did not have that confirmation down that wanted to put in motion that displacement and bearish structure as part of a higher time frame range that was delivering bearish, means that we should just expect price to drizzle up and look for the next range that we can work with to either A, continue on our higher time frame bias, or B, we might even have to just wait until a new bias breaks down, whether it be on a 5-minute, 15-minute, 30-minute, 1 hour, 2 hour, 3 hour, etc. Right? Because we understand the market is fractal. So what I want you to take out of this video is to understand that this idea of structure S&D confirmation, that 1, 2, 3 step process, the 3-box system, only works when you have all 3 things valid and basically incorporated into the actual entry. Just because you have a structural narrative and an S&D drawn does not mean it's there to hold. I teach you guys this a lot in my public YouTube channel. I have a lot of this on the private as well, but even on the public, I teach you guys to think in a way that says, hey, just because I have the structure and the S&D means nothing. The thing that creates an actual sound system, a sound narrative, and actual good trades is seeing the structural element exist, the S&D element exist, the confirmation element exist, the confirmation within its own mini structure still holding, right? Like we saw here, when this made this low, I'm happy to take a short from here. When it comes up and breaks down again, there is no longer a short that's valid there, because what it means is price is reshifting, and now if it shifts back up, there's a good chance we are actually going to see bullish price action begin to come in. And what's happening to a lot of dumb smart money, or a lot of retail in some cases, right? Again, I don't want to harp on anyone, but this is what is happening to a lot of people that are very psychologically, tuned to really wanting to get involved. What's happening to them a lot of the time is they will still look to force that sell here because they like how the zone looks. But even though the zone looks good, it's no longer valid under the condition of, that dog sniff. So, take what you want out of this and recognize that unless you have all 3 elements there, and then that you can adjust the management element for yourself as you enter the trade, there's no reason that the trade even exists, right? You're going to see it happen to yourself. There are going to be structural plays that run from you, right? Don't give you entries, and also structural elements that break down, and just start breaking down. But the idea is if you start to force longs now at areas like these, right? The striped pajama issue, you're going to find yourself always shooting yourself in the foot and getting hurt, right? Similarly, if you just follow this area here, you're never going to get an entry. But if you follow every new structural protected high and impulse that is being created within an overall bias, that might be, let's say, it's hitting a higher time frame zone here that, was bearish. There you go. Now you have a sound system to now follow these all the way down, even if they don't come to the zones. And then when they do come to the zones, you have ways to get positioned to start going short, right? And it's not until you have structure, S&D, and confirmation, all 3 of those things adding up, that you can actually call an idea a sound trade idea, right? What a lot of you like to do is you like to see a structure and you're like, that's it. I have my structure. I need to enter here. And then even if it shifts again, you still want to enter here. And then when it comes and gives you that entry, it takes you out. And you're always left confused. But the reality is you need to follow the most recent ranges that are being set forth from a standpoint of where's the structure to the left, to the right? How do we follow that up and down? Just like I showed you me following structure here, just like I followed it with my group all the way through the week. There's going to be prices that run away from you. There's going to be prices that run away from you and break against you. And instead of forcing potential even longs here, right? Remember, that's that Elliot wave form of thinking, right? Where the fractals of a short bias might take out highs, but act as a long-term bearish bias, right? Which is something I teach you also in my golden nugget video, my golden goose method. And if you want to know what that means, right? Type in golden goose mentfx. I hope it comes up. Let's see. Yeah, right here, right? This golden goose, predict the next move, smart money concepts. So check that out too, because that's what's being applied there. That's that idea of what's being applied there. Right? But then you're also going to have, if you continue following the ranges at hand and the ranges that are being created by smart money, and as they're being created, where those ranges may want to see actual plays from, aka the 3-box or the zones where there were buys before the sells within a range, that's when you get positioned. Buys before the sells that created the range, that's where you get positioned. And that's what you see from an actual weak to strong hand transfer. And the things that you see confirming these elements right here are things you're not going to see usually, sometimes you will, in areas like these. And that's why you won't be taking as many losses. But you need to be willing to shift your bias instantly if that means that that's what you have to do, right? Like right now, we take a look at this, right? Price has now technically, right, shifted bullish right here. And as it's shifted bullish, the low that created that bullish shift, right, is that last sell before a buy that took out lows, at least for me, right? So this sell before the buy took out this low. So that is where it's coming from. So we're now officially in a very bullish impulse. However, we're also aware, right? I'm going to be speaking about this in the mentorship, of course, but we're also aware that on a higher time frame, we are still very much bearish. And we're actually bearish from this point right here, right? As we all understand. So we're in this bearish move. And the overall probability is actually to continue that bearish move going forward to the next low, which means what am I going to do? Even though the structure might be valid here as a bullish structure, what I'll be waiting for and just allowing to happen, for instance, is you see on this 30-minute, we have a nice structural range here. What I'll wait for is some kind of price displacement to the downside, and then I'll look to confirm the downside displacement to keep going short. Why? Because of the same reason I've provided for you guys in the last few videos I've made, right? So make sure you watch them. If it's going, if it's short and you're forcing longs off of any zone you can, it's probably going to remain short. If the higher time frame is showing you a short bias, which it has been for a long time, in the mentorship, we've been speaking about being short ever since, just so you guys know, this weekly break right here. And ever since that break, we've been following the higher time frame shorts from zone to zone, hitting perfectly, to zone, hitting perfectly, to zone that didn't get traded back up into. But once again, because the market is bearish and holding bearish and giving smart money the opportunity to get involved in these bearish zones here, we expect bearishness. And we're not looking left here to try and catch price at this demand, and at this demand, and at this demand, and at this demand, aka the striped pajamas. That's not what we're interested in. We're interested in following this move through until it's done. And right now, all it's showing us is a bearish market. So what we're going to do is we're going to take the best and likelihood scenarios of a bearish market, which means we will wait for price to break down or create those ranges for us on a given time frame that puts in motion a 3-box that we're willing to actually follow. We are looking for that P to sniff. And if we don't find it, we'll keep walking. There's no reason for us to get involved, right? And unlike a dog that sometimes just has to go and the bladder is full, we don't have to take a trade. We don't work for anyone. We work for ourselves. That is the beauty of being your own smart money, or you're a retail trader. What that means is you have the freedom to choose when you want to get involved. If that means not trading when there is a bullish bias, when you want a bearish bias, it means you wait for that bearish bias and you trade it when it presents itself. And that's also a very big psychological issue that a lot of people make. The big psychological issue is that they go, well, I'm bearish and I know I'm bearish, but because this is bullish, I need to buy. But why do you need to buy? Why force things when you know that there is something at hand that is more potent, that is more probabilistic, right? Yes, this price can continue to go long. And guess what? On lower time frames, if there are very nice long setups, such as, we have a very nice range here. And if I see a very nice Wyckoff setup here from weak to potentially strong hands and a shift, that is actually a decent trade idea for short-term bullishness, at least at the upside, to maybe clear some highs and then potentially to hold for higher price action. However, the probability of those is less, right? And if you're new to the space, you need to focus on playing with price with the direction it actually wants to go. Because once again, even if we go and do this just for fun and go to the community outlook page, right, of most retail, on GU, almost 81% of people are long, and they've been long for months, ever since, like I showed you guys, ever since this break up here of structure. There's been about 80 or 70 to 80%, and it's been, playing around, of most people of most people long on this market. That means that for the last about, 259 days, so basically for the last year almost, most of the people analyzing these markets from even a technical perspective have been extremely long on this. And even though there are long opportunities, and we might even have a long opportunity within this weekly candle here, the probability of continuation based on the current delivery of price and the current ranges that exist is short. So the best thing that you can do, especially if you're new, is to be a dog and sniff it out and wait for those sniffs to basically confirm the structure, S&D confirm. And if you don't have those things, do not trade, right? Otherwise, continue journaling every trade you make, right? There's a reason that journaling is such a cliche. If you're not journaling, you're probably going to be losing until you start. I lost for a long time. I never journaled in my life. I started to finally journal and began to see how that mathematical edge began to play out. And I started to see what works and what doesn't, when to shift my mind and when not to shift it, when to stop trading and look for, a new structural break, kind of like this example here where we have a bullish break. But we shouldn't follow the bullish. We should wait for a bearish, right? Even though it might be fine to take it, there is no reason to, because the bearish wants to play out. Similarly, as we follow S&D zones that are bearish, we let them confirm, because we understand that trading is not picking a structural impulse and trading it. Trading is picking your impulse, sniffing it out, finding the S&D, finding the confirm, and the confirm giving you an element for an actual trade, and then you managing that trade. Because once again, even when we get those trades, it does not mean it's going to play out, right? You're getting a lot of psychological nuggets throughout this, right? Because a lot of trading is really comes down to managing it, and understanding your psychology just needs to see certain confirmations. You know, I've seen people take trades off of zones just because they look good. A lot of people might have even had a trade, you know, set up like this, which, you know, it doesn't make sense, right? Yes, there is a structural impulse, and yes, it could, you know, it could go short there. But, you know, without that confirmation of weak to strong or some kind of Wyckoffian shift, right? What are you actually entering on? You're just entering on very, very basic structure. You're pretty much, you know, you're looking at an impulse, you're throwing on, you know, a fib, maybe looking at a 61.8, whatever it might be, and you're just trying to sell it, which, you know, doesn't really create sound trade ideas. Instead, what creates a sound trade idea is an understanding between what might be occurring, what kind of range you're in, where the money is heading, right? Where's the big money heading? And, you know, as I said, we've been bearish in this forever. Maybe I'll even include a little snippet here of me showing, you know, of me in a webinar a few months back talking about a continuing bearish, and not drifting from that, and then following the inside, once again, 3 box ranges to the downside to continue getting positioned short, just like we looked at position on it right here. And when price came there, we sent out the bias of expecting, once again, if you guys remember what I spoke about, you know, sending out the bias of, hey, we're in our zone, right? Where did I send this? I need to remember now. There we go. Right, where I sent the bias of, yeah, so right here, right, this is where I was looking at it, where I sent the bias of, hey, we're in a bullish range within our big structural range, and the only way that I'm actually going to consider actual shorts in this market isn't by forcing shorts just because it's in the zone and it looks like it's holding. It's going to be if structure breaks down impulsively or with displacement to the downside to showcase that this weak to strong wants to hold, and that the inside 3 box setups that are creating these bullish impulses from the down moves before the out moves that are liquidating lows are actually looking to shift, which they're not. And in the case that they're not, I expect it to just drizzle to the top side, in which case it does, which now puts in motion new bias that, again, even though the bias might be valid in terms of a structural range to the upside, it doesn't mean it's valid for you to trade it, right? And the beautiful thing about what we do, once again, is that, you know, you're your own person, and you can take a break. You can step back if you don't want to trade something, right? You can step back if the range does not add up with what you're looking for. You can wait for the probabilistic ranges to come forward. Now, again, as you test it, you'll become more aware of ranges that you can trade, even counter trend, right? And there are, of course, ways to get involved to go long, like I showed you guys right here. You know, there are ranges that you can use that are good and look good and create optimal upside potential, right? Because even in this range right here, the upside potential already is relatively large from this zone to here, which means, you know, that could be a good trade sound idea that if price does want to continue long and come into that higher zone here, which is part of that bearish narrative right here, well, then you're creating for yourself an element where, you know, there actually could be a decent long. However, that said, even though it does appear to be that way, the overall thing that makes most sense is the bearish side delivery, right? The bearish has been in motion. It has been in motion forever. It's been in motion ever since our bigger time frame shifts. And what we want to look for is confirmations that continue on that bearish move, because we can't always anticipate that there's going to be a pullback. Because remember, the probability of a pullback is less than the continuation of a given structural play. And currently the structure wants to go short, so we allow it to continue going short if that's what it wants to do. Now, again, you can play between a few time frames, right? Because I haven't taken a look at even a higher time frame. But, you know, looking at a higher time frame, we're still very short on this market, it looks like, right? We're just playing around here. So really, all we want to expect is that theoretically, price should be continuing. Again, this is not financial advice, but under the current assumption, we should be looking for ways to get positioned short and targeting, you know, lows out here for our next lows to be targeted, right? Because currently what price is doing is it's showing you wants to go bearish. So we expect that bearishness. And if that bearishness is going to start to go from, on a higher time frame, a bullish bias into a bearish bias, that's the bearish bias we want to focus on, right? Instead of forcing any potential bullish plays. So that is how you start to marry together these concepts, right? And that's how you begin to properly confirm them. So, you know, you can get involved in the counter trends, right? Like in any of these structural breaks, there could have been counter trends here that you take losses on or break evens, and then there's great counter trends here that actually run back up into zones, and that's phenomenal, right? That can happen, but remember, that move back up is less probabilistic than a continuation, which means that if you're waiting for a break back down on any given time frame, because remember, this is fractal, then there's a higher likelihood that you can get positioned in a really nice way to continue an overall down move. Now, similarly, you know, just looking at this, there's a good chance that this week during my webinar with my students and the members in the mentfx community, I'll probably look at this and say, you know, we were looking for shorts here, you know, no shorts presented. It began to continue drizzle up, all good. We've created a 30-minute range right here. What I would expect, right, for the next week, you could say, is if I get a break of this low that displaces, not just a wick, displaces to the downside, I will start to follow any bearish range that continues giving me bearishness to clear out this low right here, and that's going to be my overall target. But similarly, what I'm going to say is that if during one of our main sessions, right, which I don't think is going to happen because it's really close, but if during one of our main sessions, price continues to break out of here and continue higher, and on lower timeframes begins to put in bullish structural ranges, there are going to be opportunities, once again, from a standpoint of structure, S&D confirm, to get involved on a long to this top side right here, because it creates a very nice range that you can work with, as well as to the top of the 4 hour right here, because once again, that's part of a bearish bias. However, do not forget that the most probable move is to wait for a displacement to the downside, wait for a $3 be set up on the downside, and look to trade that $3 lower and get positioned to take that short into profitability. So I hope you guys enjoyed that. Thank you very much for watching, and remember to confirm. Hey, how's it going, guys? So as promised, there was going to be a giveaway for a free one-on-one with me. I let you guys know right here that all you have to do was comment on this post right here on Instagram, and I would pick a winner just down the line. So this is going to be me picking that winner. So we're going to take that Instagram post, and we're going to go over here, stick it in, scan all the comments, and I'll reach out personally to the winner through Instagram as well. So 151 people, very cool. Let's find the winners. And we have Michelle and Tichi. So congratulations, or Michael, not sure, but congratulations. I'll reach out to you on Instagram, and make sure you're following me on Instagram or YouTube, which, you know, is fine, but the community tab, but mostly Instagram, since that's where I normally post for any crazy updates in the future and other giveaways. Thank you guys. See y'all.